I'm Heeta Lakhani. I am the Chief Correspondent for SDG News. And with me I have today Dan Labovitz, CEO of Green Impact Exchange.
Hi, nice to see you. Good to be here. So I'm Dan Labovitz. I'm the CEO of Green Impact Exchange, a stock exchange for companies engaged in sustainability and for sustainable finance products.
Dan, why don't you kick us off by telling us a bit more about Green Impact Exchange? What does it actually mean? What do you do? And how did you come across the idea?
Sure. So the Green Impact Exchange is a registered national securities exchange. What that means is that we are fully licensed in the same way that any of the other stock exchanges in the United States are licensed. And we trade all of the securities that trade in the United States. Our particular focus is on securities that of companies that have a sustainable finance focus, sustainable corporate governance, and also on products that service the sustainable economy. In addition to that, we are a full-service exchange trading all of the, as I said, all the manner of products that we trade in the United States.
Lovely. And how did this start? What is the origin story and the idea behind GIX?
So the co-founders and I are all former NYSE executives. We got into consulting on capital markets. We had a person who was compliance and someone who was operations, someone who was trading, and then I was on the regulatory side. And many of our clients came to us with questions about how to interact with capital markets, whether they were fintechs or whether they were broker-dealers or market operators who were looking for how do you interact with the public equity markets. And as we would talk to them, particularly around sustainable finance, we found that there were things that needed to be attended to on the sustainable finance side that weren't necessarily being addressed in the broader market. Things like if you're a sustainable investor, how do you know that a company that you're looking at is engaged in sustainable practices? Mm-hmm. If you are a company that's looking for investors, how do you explain the needs of sustainable finance, the different ROI that sustainable finance has? And so we saw that there was a space for a focused stock exchange that would address the capital side of the capital markets rather than necessarily just the trading side of the capital markets.
Oh, that's great. Okay, so tell me a little bit on, you said this is still being built. You've got the licenses, you have the things in place. What are the next steps? What is this looking like? And can people get engaged already? What does it look like?
So GIX is a startup. So we are launching the exchange at the end of this year, the beginning of next year. We have a technology partnership with NASDAQ to provide the underlying trade technology. So we're not building our own technology, but we'll be running what I would call institutional grade technology from day one. The trading will be, as I said, in all of the securities that trade in the United States. It's called unlisted trading privileges. So that means that when you trade a stock, even if it's listed at a particular exchange, that doesn't mean it only trades there. Yeah. It trades at any exchange wherever the best price is being shown. So we will have connectivity to all of the large market makers that provide liquidity to the market, all of the large broker-dealers who funnel order flow to the market, and we will have incentive programs for the market makers to provide the best quality quote and trade experience on our market. People can, so we'll be launching at the end of the year, so people will be able to join and to start trading beginning of next year.
Okay, that's great. Let's dumb it down a little bit for a newbie like me. I don't know much about finance, but let's assume this was up and running. Mm-hmm. What would this mean for me? How do I sort of engage with GIX?
So an exchange's direct customers are the broker-dealers. So whether it's the Morgan Stanleys and the Schwabs and the Robinhoods of the world, or whether it's professional broker-dealer, professional trading firms. So you would enter a trade the same way you always do if you had an account at a place like Robinhood. And then that order gets routed to the exchange that has the best price. So on our side, like I said, we're incentivizing through our fee structure for market makers to be at the market with the best price some percentage of the time of the day. So if we're showing the best price at the moment that your order comes in, then we would be the ones to execute that order. We will be running a special kind of market in addition to what we call the continuous market. So there's trading, the market opens when the bell rings at 9:30 and it closes when the bell rings at 4 o'clock. we will be running what are called scheduled intraday auctions. Every half hour, we will run an auction in all of the stocks. It's every half hour on the half hour. And the reason for that is that if you look at the way that stocks trade today, there are 7 stocks, we call them the Magnificent Seven, that trade about 50 to 60% of the total trading volume in the course of a day. So those 7 companies get a lot of attention, and the other 4,493 companies that are listed on stock exchanges occupy the rest of the market. So you can imagine that for some of the smaller companies, it's very hard for for market participants to find each other. And we happen to be taping at a conference, so imagine if I said to you, hey, Heeta, I'll meet you at the conference. The chances of you and I finding each other among the 1,000 people who are here are very slim. But if I say, let's meet at the information desk at 11 o'clock, then it's very easy for us to find each other. So a scheduled auction is similar. Right now, a continuous market order spreads out all of the trading over literally 23,400,000 milliseconds in the course of a trading day. So if I put in a buy order at 10 o'clock and you put an order at 12 o'clock, it's not that easy for us to find each other. The auction is like that information desk. We'll meet at the auction post at 11 o'clock and we can trade that. What that does is it makes the prices better. It makes the trades easier. It makes it easier to trade larger sizes. So it's a better experience for those companies and for their investors.
So tell me, how do we get to December? What are the things that you need from now until the launch in December or early next year?
A lot of work. Fortunately, we have a great partner in NASDAQ as the technology provider. So NASDAQ provides the trading technology for about 125 exchanges around the world. They've never provided it on an independent basis to an exchange in the United States. So we're the first customer for that. So between us and their technology team, we will be doing all of the build and implementation of the technology, all of the testing, all of the things that you have to do to make sure that the connectivity is right. At the same time, we're putting members through the membership pipeline. So we're qualifying the large firms to make sure they have all the right paperwork, all of the right processes in place. And then sometime at the end of the year, we flip the switch and we start trading.
Let's go a little further on from here. We're in the year 2030, the year when all of the change that we're expecting should have happened by then, in the most ideal scenario. What does this look like for you and for GIX in 2030?
So let me step back half a step to what happens between now and 2030. So there are 2 things that are happening in the market that I think are really important. One is we've been talking about the convergence between traditional finance and decentralized finance, blockchain, for years, and it was always coming at some point. Well, it turns out it's here. It turns out that the convergence that we've been talking about started happening really in earnest this year, in March actually. There were several deals between large exchange groups and large blockchain and DeFi companies that really announced that the large institutions are here to play. And so one of the things that we're doing as an exchange, and we've been planning for over the last couple of years, is how do you manage that transition from traditional share-based trading to digital trading. And so at GIX, we've been developing what we call a digital bridge, which is essentially a digital front door for blockchain participants to be able to enter orders, but then trade with the rest of the market, so they're not isolated in their own little pocket of liquidity. And then doing some things to ensure that their experience looks familiar to them. When you trade on blockchain, you're used to being to interact directly with the protocol, directly with the market, rather than through an intermediary. So we're working on a way to make that experience feel familiar. You're used to being able to settle your trades instantaneously. You trade and you get your assets right away. In the traditional markets, when you trade, you agree on the trade today, but you don't get the assets until tomorrow. So for someone who's in the decentralized side of the market, that's a new experience for them. They're not used to waiting. And it creates risk because they've locked their assets on the trade day and they are waiting for something to happen on the other side. So we've created what we're calling the atomic settlement coin, which smooths out that gap. And there's lots of detail I could go into, but I'll try to keep this at, you said you were at the newbie level, so I'm keeping that. And then ultimately by 2030, ultimately by 2030, what I see happening is that we're in a world where we're issuing shares as tokens, that you're no longer in this hybrid world. And that opens up some really exciting possibilities. There are things you can do with a tokenized share that you can't do today, information you can get out of the trade that you can't get today. And that's not just on the trading side, that's on good for companies. Companies can get information about what the market thinks of their stock in very granular ways. So that's one thing that's happening. The other thing that happened, since started talking about sustainability, is GIX is developing a set of specialized products that will enable sustainable finance participants to tailor the trading experience to things that they need to do. Mm-hmm. So, for example, we talk about carbon credits, right? Carbon credits are a market that is still developing.
Yeah.
And the problem with carbon credits is they're very hard to trade if you're not either the producer of the carbon credit or the company that's buying it and retiring it as an offset. So we're creating a trading vehicle that allows other market participants, whether it's market makers, whether it's pension funds and other large institutions, or whether it's retail traders like you and me,
Yeah.
to be able to buy and sell carbon credits as an equity share, which means I don't have to be set up with a specialized account on a carbon registry. I don't have to have a carbon broker. I can call my broker or put in my electronic order and say, I want to buy a carbon credit share.
Okay.
And so that's another example where we're using market structure to build things that don't exist today. And by 2030, we think those things are really have taken hold.
That sounds very exciting. And I really hope it does take hold and it actually takes great hold and expands from there in the next few years. Okay, let's assume you've gotten this vision, right? Mm-hmm. We're here 4 years from now. We've spoken about everything that you've done. We're having another conversation, and we've done X, Y, Z plus 3 things more.
I have to do 3 more things.
What do you need to help you do that? What is the ecosystem that will enable you to make this change happen?
It's a great question. So I'll start with the sustainability side for a minute. Sustainable finance is a specialized area of finance, but it's not totally off to the side. It's not completely separate. And I think, unfortunately, what we see in sustainable finance today is that the sustainable finance side of the market stays isolated largely in private equity and in private markets, whether it's philanthropy or whether it's family offices funding things or whether it's VC and private equity firms. And that's fine, but it's a limited pool of capital. There's only so much capital to go around, and it's very one-off in terms of negotiated outcomes. We would like to see the public market and the private market kind of merge. We would like to see the private markets expand. We'd like to see the opportunities for companies that are developing, for example, carbon credits or other new technologies to be able to access public market liquidity. We want to be that bridge, mm-hmm. right? And I think that requires a shift in thinking from the sustainability community. That there's been a drumbeat of bad news, right? The Global Financial Alliance for Net Zero collapsed and people withdrew, and various other similar kinds of banking alliances collapsed. You've had firms that were big supporters of sustainability pulling back and saying, we're not going to do that. You've had lawsuits, you've had legal challenges and things like that. And I think that the lesson that I would take from that is that the sustainability community needs to own its own infrastructure. It needs to adopt, frankly, an exchange like a GIX mm-hmm. to be providing the infrastructure for themselves so that they're not beholden to somebody else's agenda and somebody else's about face.
Yeah.
So that's one thing I'd like to see happen. And then the other thing that I think it needs to happen is that both sustainable finance and every other kind of finance is going to have to wrestle with what does it mean to live in a tokenized world? What does it mean to have the ability to track information from the source all the way to the endpoint. So again, come back to carbon credits. If you're building a carbon credit and you can trace when was the tree planted, does the tree still exist today? Did it burn down? Was there a forest beetle that
Yeah.
killed the tree or things like that? Or carbon capture and storage. When did the carbon go into the ground? Is it still there? You can have real-time monitoring. All of that information can be bundled with the actual carbon credit in a automatic, tokenized, smart contract. So I can see it in real time. That is something we don't really have today. And it also goes to the traditional company side. I can see what's the state of a company's inventory. What's the state of its reporting practices? Does it match what they're, right now we put it in a 10K or a 10Q. We could conceivably attach that to the share as we go forward.
The more I talk to you, the more I like the idea of, the space that you're building, but also just the fact that we're giving the agency to the people who want to and are going to be using it.
Yeah, democratizing finance is a thing that is another sort of new frontier. We've talked about, we talked a little bit about the decentralized finance side. Frankly, one of the things that DeFi has brought to the fore is the idea of what's the role of the intermediary, right? Do I need a broker to trade? Do I not need a broker? I don't know the answer to that question. I know what the law says. I know what the SEC policy says. But that's the question that DeFi is kind of bringing to the front. And so I think the industry is going to have to grapple with that. But the end result is you find you have participants who are able to do more on their own. They're able to do more with technology and more quickly and innately than they could before.
I have a question, and maybe it just sounds really stupid, and you can tell me that's not how it works. But
I would never do that. I'll gently suggest other ways, but I would never say it's stupid.
You're too kind. We have an existing stock market, and then this is a market that you're building for sustainability and allied industries. Is there a way that the existing current market could be tweaked to incorporate these kind of industries in sort of a platform like this? Or do you think it's going to be a lot more efficient, better, easier if they were just kept separate? And the reason I'm asking is because if we can get to where everybody is currently, hopefully we can already tap into a larger audience than having to get more people to know about this and then come on to a platform that you're building.
So I think I have a great deal of respect for what my sister exchanges are doing. My background is I started at the New York Stock Exchange, and I worked there for a long time, and I'm very proud of the work that we did there. And I used to joke that if you cut me, I would bleed NYSE blue. But I think that like any large institution in an established industry, large institutions have what's called the innovator's dilemma. You have a whole legacy market that you need to protect, a legacy customer base you need to protect. And so oftentimes you see, and this isn't just in finance, you see innovations coming from startups, from pockets of the industry that you didn't expect. And I'll give you the example of the ETF, the exchange traded fund, is probably the largest, most well-known financial instrument. It was started by a stock exchange that was third place in the market structure. And it was started because they were looking to say, how do we, as a stock exchange that's in a distant third place, stay relevant? How do we get customers? And from that humble beginning in 1993, you get to the ETF market, which is a 17 or 18 trillion dollar market cap market today. It took them 10 years to get from the first ETF to $1 trillion of assets under management, and then it snowballed from there. So I think what we see is that there is lots of innovation and a lot of innovative energy coming out of whether it's us or whether it's some of the other startup stock exchanges that are trying different models, or whether it's the DeFi side. And I think what we're seeing is that when you don't have that legacy business model that you need to protect, and you don't have all of those legacy investments you need to protect, you can experiment, you can try things, you can fail at them, but you can try them much more easily. And so I think that's where we're adding real value to the marketplace. We're bringing new ideas to the front, seeing if they work. If they do, I fully expect that they become part of the industry standard. If they don't, there'll be a funny little footnote and everybody will forget about them.
to the audience that might be watching, so this could be philanthropists, family offices, but it could also just be the general audience out there. What is the one thing you want them to remember out of this whole conversation? What is the one key message? And the second part of that is, what is the support that people can provide so that we can actually be a part of this and make sure that you're getting to this as soon as you can?
So I'm going to do the politician answer. I'm going to give you 2 or 3 things. The most important thing that you should remember. The first thing is that I think that it's important to be creative in finance, that there's a tendency in this kind of industry to cater to the largest, the professional trader, with the fastest trading and the cheapest trading, and that's not necessarily serving all of the market. We talked a little bit about the other 4,493 companies. Those companies, they need help. They need a different market model. And so one important thing to take away is that there are other market models out there. Second important thing to take away is that what we're trying to do is not to come in like a bull in a china shop and knock over everything and start again. Frankly, it would be much easier if I could start with a blank piece of paper and build the system that I have in my head. It's beautiful, it's perfect, it never fails, but that's not reality. So what we're doing is we are taking the existing securities laws, the rules, and using them in computer science, they talk about primitives. They use them as building blocks to build something new. And the benefit of that is that you're evolving rather than engaging in revolution. So that's the second thing. Use the existing system, incremental change, but change. And then the third thing I would say is that you talked about democratization of finance. I think that's the next big wave. I think that before COVID and before lockdowns, retail traders were about 10 to 12% of the market trading in a given day. During COVID lockdowns, when people had not much else to do and they had a little cash, retail trading spiked to about 20 to 25% of the market. And everybody expected, it's going to go back down. As soon as the world turns to normal, it'll go back down. It didn't. It actually went up. It's now almost a third of the market. And that is a force to be reckoned with. That pressure, you saw GameStop, and you remember that from 5 years ago, where retail traders said, enough is enough, we want in. I think those kinds of democratized experiences are going to continue to happen, and the industry needs to respond to that, whether it's DeFi or whether it's whatever, prediction markets, whatever the next thing is, that you need to respond to. And then the last thing I will tell you is that because of our positioning, we don't believe that there needs to be a choice between, are we going to do prediction markets or are we going to have equities markets? We're going to have both. And my job as an exchange is to find ways to bring some of that logic and some of that energy into the capital markets to expand them, grow them, evolve them.
Fabulous. I think it's very exciting. You have a lot on your hands, but wishing you all the very best.
Well, thank you. I really appreciate it. It's been a great opportunity to share our story, and I'm excited. I think I would end with, investing is an optimistic activity. Whether you're a sustainable investor, you're not a sustainable investor, people who invest are doing that because they expect the future to be brighter, bigger, better. And so every day that I get to help facilitate that kind of trading, I feel like I'm doing something that's optimistic, and certainly on the sustainability side, thinking about optimistically about what's the future is something we've had to kind of get used to not doing.
Yeah.
And so I'm looking forward to you said 2030, I'm going to say I'll look forward to the next 5 years, so 2031.
Yeah. Now let's build hope together, and looking forward to seeing a very vibrant future for GIX.
I love that.
Yeah.
Thank you so much.
Thank you so much.